Hello, good afternoon or good evening, should I say now? It's Adil Fazal, market analyst at CFDs.com. Be sure to visit CFDS.com for your trading needs, a leading specialist in spread betting and CFD brokerage. And alternatively, if you want to visit the educational site, it's www.cfds.education. Okay, folks? Right, a sum up of today's market price action. Okay. Interesting session today, very interesting session, full of swings and counter swings, etc. It's very tricky, this week. I'm currently minus 100 points this week down, and very hard to fathom or understand this market at present. Okay, let's try and decipher exactly what's happened today, and then we'll hopefully by concluding that narrative, we'll be able to project as to what will happen on the morrow. Okay, with regards to the actual Asian markets, first of all, that's where we always commence. The US markets obviously had a stellar move overnight. We made new highs. You can see on the chart of the S&P 500 here. A very impressive thrust high yesterday. We hit a pivot high of 2116. On the daily chart, you can see that very clearly as well. Made a high of 2116. Even took out the resistance on the July 2015. So the next potential resistance zone is 2130 and 2136. But having said that, we do have this rising contracting wedge pattern, which is very bearish on the S&P 500, and I'll be elaborating on that hopefully in the actual US market video. But for now, this is basically what we have to grapple with. Okay, so the S&P 500 is certainly rallying stellar overnight. The Nasdaq very impressive overnight too. Okay, and that certainly is indicating a movement higher. Okay, but the Asian markets certainly very impressive, up a 2.1%. On the Shanghai, the Hang Seng up the Shanghai was up 4.3%, the Hang Seng up 2.15%, and the Nikkei up by 1.3%. So very stellar gains overnight, very impressive movements. Okay, so that obviously put in a risk on tone. Now the only factor that was, and also the other arguments, by the way, before I go into the bearish arguments, the bullish arguments for the FTSE 100 were that you had stronger Chinese data overnight, Glencore news with regards to its cutting its or reducing its debt, etc. That was certainly bullish. We had stronger UK PMI data, stronger French, Spanish data, and ING higher, up 15% in terms of earnings. Persimmon positive, Marks and Spencer positive. So certainly very bullish arguments for the rally to continue, given the fact that the Shanghai was up 4%. Now the negative arguments, we had Weatherspoon down, Volkswagen limit down 10%, and we have had high Moody's rating cut as well on that. So that certainly is indicating a risk off tone. Vedanta weaker German data, and weaker EU data as well. So there was a lot of reasons for the markets to sell off, and given the fact that the Volkswagen was down 10%, that negated all the bearish, or should we say all the bullish news from overnight from US and Asia. And that created a risk-off tone. Now let's see exactly how that played out in terms of price action. And there's no other chart better to observe at present will be the German DAX. So that will give you the true picture. Now the 10-minute chart itself in the morning on the German DAX, you can see here the market opened at 8 a.m. at 10,960, so we gapped higher. Okay, given the fact that we don't close at 10,950, the market immediately sold off. It immediately sold off and then rallied. Now, initially sold off on Volkswagen news and rallied on. Now, given the fact that the reason why it rallied as well, if we go back and look, if you look at the actual automobile sector, you can see initially we sold off into gap fill. Okay, so we filled that gap, and then the German DAX subsequently rallied quite impressively. Okay, so we totally factored in all the bearish news, and all of a sudden the German DAX made a new high, and this is where it was very baffling. Okay. It was very hard to fathom, and one of the reasons why it made a new high potentially was given the fact that the Shanghai and Nikkei were higher overnight, and the US markets and Nasdaq were making a new high as well. That was subsequently rejected because I did actually attempt to short the German DAX there. I did attempt to short it initially down here. I closed out very quickly. It rallied, I shorted again, made 25, and then I just sat back because it was very hard to read this bounce. It just was bouncing everywhere. Okay, so very hard to understand and fathom. Then we obviously put in the right shoulder, so we consolidated, and then obviously the market sold off. Now it consolidated for a very long time, and it totally ignored the news from obviously Volkswagen until towards the later part of the session. Even with a weaker euro, with the euro now touching 1.0850, we obviously sold off. So very confusing price action from my understanding, and that's why I'm negative this week, because I'm just not grasping how this market or what this market is focusing on, especially given the fact that we had the Nikkei and the Shanghai down the other day, and yet this market still managed to muster up a rally. So have to respect the price action for now and try and understand exactly what the motivational force is at present. Given the fact that we currently have the euro now at 1.0850, with the comments from Miss Yellen today, or the speech from Miss Yellen, certainly are being interpreted as being hawkish, because I have been stopped out on my Aussie longs as well. Okay, now that was a scenario, okay, and I've given you the fundamentals and the explanation as to why the markets did what they did. Now, obviously, the weaker German data and weaker EU data, and concerns over the fact that we had with regards to the US markets being at a top or into resistance. Ever since the US markets came on, we obviously sold off quite substantially. Okay, now let's see exactly how this market is going to trade going forward. Okay, now I'm just going to pop this on hold for a second whilst I bring up the charts. You bear with me. Bring up the chart of the FTSE 100 first of all. Okay, so the FTSE 100 obviously rallied, gapped up, moved higher based on China. We obviously pushed higher based on stronger UK data to a large extent. We did factor all that in. Now, there was a gap that I was focusing on with regards to traders, and you can see here, there's a gap here. You currently have the gap at 6444, 6445, but the market certainly pushed even higher. The next level of resistance was up here, and then obviously up here, but yeah, we totally ignored that. Okay, we totally ignored it all. Bear with me. Okay, back to the US markets. Okay, so you explain this US market setup now in terms of bullish and bearish. Okay, so bear that in mind. The daily chart has a rising contracting wedge pattern. The 60-minute chart has a H&S formation, so therefore we are looking at potential propel or movement lower. Now, let me just add this on because I always forget. Volume, that's what I need to add on here. I always forget to add this on. Okay, so bear that in mind, folks. You have a H&S formation on the US market, so therefore you are looking for a potential move and a thrust lower. Okay, now with regards to the S&P and the 10-minute chart, certainly indicating weakness. As you can see here, 2105, you are looking at 2096, potentially even lower in terms of the US markets, given the fact that you are seeing obviously weakness in commodities at present, and there are other reasons with regards to Miss Yellen obviously potentially keeping the Fed hike still in play going into December. Okay, so certainly a bearish pattern there. So if there is a bearish pattern on US markets, so what do you think will happen on to obviously European markets? The same will occur. Now, the German DAX on the daily chart, going over the technicals now. Daily DAX, obviously you can see a bearish candle there based on Volkswagen, so this whole thrust higher now is certainly under jeopardy, given the fact that you have a topping tail on the weekly chart and you are finding resistance between a 61 to fib 75%. Going to a 60-minute chart, you can see that you clearly have a bear flag formation on the German DAX. Okay, so again, certainly observe that you currently are in a bear flag formation. I did expect the weakness in the euro to certainly propel European equities higher. That has failed to do so, and the euro certainly is finding some support now from a trading perspective. Now, it is worth visiting the European or Euro USD chart. Now, if I just go to the daily chart, you can see that the horizontal support is certainly being found on the Euro USD, and therefore you are looking for a potential move or a short squeeze higher on the euro itself. Okay, so given the fact that the euro is obviously into support, that obviously does signify and indicate a risk off phase for European indices from my perspective. So bear that in mind and keep that into consideration. Okay, so that's something that we certainly need to observe, given the fact that the Euro USD is a risk barometer, and therefore you are looking at a potential reversal in global equities based on the Euro USD itself. The Euro USD obviously lower has led European markets higher, and based on the efficient market hypothesis, etc., you are looking at obviously the market's pricing that in very quickly, and therefore be aware and be alert of that. Now, the 4-hour chart certainly does remain overtly bearish, but as you always know, the larger time frames take precedence and they will generally dictate. Now, the 60-minute chart, you can see horizontal support is there by zooming back, so you are finding support in the interim, okay, on the Euro USD. Now, that is actually confirmed by the dollar itself. So if I go to the chart of the dollar itself, you can clearly see on the 60-minute chart we've closed a gap and therefore looking for a potential thrust lower. And you do have what you can see is a H&S formation, so there's the head. There's your right shoulder, and obviously now we're looking to thrust lower. On the daily chart, you can see that we are back into horizontal resistance, and therefore the dollar is certainly finding weakness, and weakness in the euro, and weakness in the weakness in the dollar means the euro certainly goes higher. The Aussie and the Kiwi certainly are looking to propel higher. Is that necessarily good for European equities? No, it's not, because everything is trades inverse to the USD. So always bear that in mind when obviously trading the markets themselves. Okay, very, very important to observe. Okay, bear with me. Okay, just updating my trades to subscribers. Okie dokie. Okay, so now we move back onto the German DAX, and I'll just be able to bring that up. Bear with me. Okay, so you know and understand the reason why the euro is obviously into support. If that's the case, then as you know, European equities are going to come under pressure, and we already know the US markets are certainly under pressure given the S&P 500 has a H&S formation. Now, the only indices that may well survive is the FTSE itself, so that's something that I probably will discuss afterwards as to why the FTSE will survive, because the relationship or the lack of divergence or lack of convergence with regards to the euro. Okay. The actual German DAX, let me just go back to the German DAX. I want to go to a 10-minute chart, the German DAX, to show you the actual sell-off on the weakness. Okay, so 10-minute chart on the German DAX, we did have the H&S formation. We have short squeeze higher given the fact that it's currently trading at 10,860 now. You had this H&S formation, so we put in a double top, right shoulder, flush, okay. Your pivot high was 10,890 or 10,980, 10,990. Your pivot low was 10,920, so you had a 70 to 80 point drop, and that's exactly what we observed. We obviously put in a base at 10,840 and then obviously popped higher. Now this sell-off will continue from my perspective, given the fact that news is just out with regards to Moody's downgrading Volkswagen, etc. So therefore the Volkswagen scandal is back in the spotlight from my perspective, and that will obviously put pressure on the rest of the markets as well. The next potential support zone for the German DAX is around the 10,750, so don't be surprised if we go and revisit that zone. Okay. Now, looking and cross-referencing that on the Euro stocks itself, the daily chart, the Euro stocks, this is a setup that I've already sent my subscribers. I actually am short the Euro stocks at this juncture now. You've put in the topping tail on the daily chart and looking to potentially reverse. Okay, and that's another 200 MA as well. Using your Fibonacci retracement ratio, taking the pivot high, also taking the pivot low, and you can see that we are banging into that 61 to 75% fib resistance, and therefore argument there therefore is obviously onto the downside. Okay, in terms of the Euro stocks itself, given the fact that the euro is into support. Going to your 60-minute chart, the Euro stocks, you can see that we have this rising bullish channel now on the verge of potentially breaking lower, and certainly remains vulnerable to obviously the downside. The support zone next will be this key diagonal trend line at 3400. Okay, the 10-minute chart itself, you have lower lows, lower highs. We've put in a double top now, and we are looking to reverse. The next support zone on the Euro stocks at present is around the 3415, 3420 level on the downside. So again, we'll observe that. Obviously, you have this key diagonal trend line at 3410. Given the fact that the euro obviously is now king, is now into support, you are looking at a reversal in the rest of the markets. Okay, that's confirmed obviously the weakness on the DAX, and now we can look at the CAC and see exactly where that stands with regards to the French CAC. Bear with me. Here we go. Okay, so go to the daily chart, the French CAC. You can see again, you've put in a topping tail here at gap fill. Okay, so as soon as we close the gap here on the French CAC, the market obviously has found weakness, and we've had a lack of follow through on the French CAC post European, or Asian and US Asian markets. Okay, so daily chart is, you can see here, the 60-minute chart of the French CAC. Obviously, you have gap fill support of 4936, and we are on the verge of obviously hitting that. Now it'll be interesting to see how the French CAC responds with regards to support of 4936. But given the fact that the euro is in support, don't be surprised if that breaks. And then the next support zone is going to be 4910 on the actual euro stocks itself. Now, looking at your chart itself, you do have an unfilled gap at 4800. Certainly remain privy and remain open to that. You have obviously held this, so you have been in this minuscule bullish channel. Okay, and we are on the verge of breaking that, so certainly some downside risk there, given the fact that Volkswagen concerns will dominate and the euro is into support. You have a double whammy on the actual markets themselves, and obviously adding the fact that you have this fear of Miss Yellen raising rates in December, and you have a top in US markets. That's a triple whammy, and that certainly isn't a scenario that you'd like to be long in. Okay, right. The 10-minute chart of the French CAC itself, you have an unfilled gap, like I've already explained. You have 200 MA at 4920. You had this HNS, which obviously has been negated. Let me just get rid of this now. This is an old trend line. Okay, so any potential support zones, again, that's more or less in line with that. You do have semi support here and here, so 4910 and 4900, and the 200 MA is at 4920. So again, observe that you have point in the top, and you are looking at lower lows and lower highs in the French CAC, and that obviously confirms a weakness in the German DAX also. Okay, now the FTSE 100, I'm going to do a separate video with regards to that, and I'll elaborate because of the lack of convergence or relationship with the euro. It relies more upon the dollar itself, but the dollar itself, it's a different argument. Okay, so I'm not going to confuse that in this European market analysis. So as you can see, US markets putting in a potential pivot top, therefore looking for European weakness going into the morrow. Again, the key reasons or factors here are the fact that Volkswagen concerns are back. Okay, euro is into support, so therefore euro will catch a bid, and the risk-off scenario, risk-off game will certainly be in full steam. Okay, and there are other factors as well. Lack of follow-through from the Asian markets, etc., etc. US markets, Yellen, and I could be here all day, but I think that's a brief summary. Be sure to trade safe. Be sure to visit cfds.com for your trading needs. Open up a trading account and come trade with me if you wish on the live analysis service. Be sure to email me daytrader@inter_market_analysis.com, or alternatively follow my my details on Twitter, or obviously on my website, and my email will be there. Be sure to email me if you want to join me and trade in real time. Okay, folks, I think that's a wrap. Be sure to visit cfds.com, and good night. Goodbye.